So welcome once again to another edition of Wednesday live session. It's a session I've created to assist as many as I can to understand chart analysis. That is the whole essence of Wednesday live session. If you are in my group, there must be something that must have attracted you to trade with me. And if you are trading with me, you should be able to understand my system of trading. All right. So that is the reason why I created Wednesday live session for everyone who have or who has studied my video, the theory I look at, they have also looked at it, the concept I teach, they have looked at it, but then they need to have practical guidance, into the applications of those theories, those concepts, and those guidelines. All right. So Wednesday live session is a session that I've created to achieve that objective, and it is free for whoever needs it. And for the avoidance of doubt, because of this Wednesday live session, I have to pay. I paid about $14 or so every month to Zoom, just to, just for us to have unlimited, time to be able to do analysis. But you see, some people sometimes they don't care to join. And I look at myself, am I a fool? But I look at it again, no problem. Such is life. If it is two people that are benefiting, I'm spending this $14 a month just for those two people. That is why consistently for a period of close to 2 years now, I have sustained it to make sure that I'm on premium on Zoom. So please just know that anytime you are not availing yourself to participate in this session, you are definitely making me to lose money. All right. And each time you are participating, you are, helping me to utilize the money I have spent to get a premium package on Zoom. All right. So let's start our analysis on gold. Our analysis on gold. So whenever you want to do analysis, you have to zoom out. All right. It is when you zoom out that you will see the structure clearly. So if you look at this gold here, I've told you time without number that for a long time, all right, no investor will buy gold at this level for a long time. Do you see? Listen to me, because you will say, why do you say no investor will buy gold here for a long time? And then you are buying. I am buying because I'm buying for a short time, not for a long time. So a monthly analysis, gold is coming to, can write it down, gold is coming to about 1,000, from 1,839. I don't know what will happen, guys, but this is where gold is coming from. Let me show you a sample of what I'm talking about. That was how I told you specifically on the 12th of July, 2021, that BTC will come down below 20,000. Some of you thought I was crazy when I told you that BTC will come below 20,000. You thought I was crazy. Can you see BTC was at 68? I said, don't buy. BTC is coming to below 20,000. When it got here and it was going up, I said, don't waste your time. This is a corrective structure. It's going to come down. Look at it. Boom. BTC has hit below 20,000. Right now it's at 20,467. Okay. And there is the possibility of BTC pulling up here, coming down last time to around 8,000. It's possible to around 8,000. And then from there, peak liquidity, boom, to the upside. Right now, nobody should buy BTC. Nobody should do what? Nobody should buy BTC. Let us see the structure. it is creating at the lower time frame. So here is just to show you, you know, what I saw the other time and the kind of structure that is developing itself in gold, XAUUSD. All right. We need to see the same thing is repeating itself here, guys. I am saying that I would like gold to come to this area. Okay, three-wave structure with a long C. I want this to come down here before we make a move to the upside. All right, that is what you have on the monthly time frame. Then on the weekly time frame, guys, what do you have? On the weekly time frame, we have to focus on what's happening at the top. We need to focus on what's happening at the top. Okay, you can see that's how we do our analysis. Gradually, you have this, you have A, you have B, you have C. Okay, so you need this to come to the downside. Okay, you need this to come to the downside, but then that is what weekly time frame is telling you. So you need to move to the next time frame, guys. The next time frame is daily. You need to move to daily. Can you see how we are doing it gradually, guys? This is how you approach your analysis. So in daily time frame, you have had this impulse, you have had this correction in 3 waves up to 78% retracement, because this is zigzag, guys. This corrective structure here is zigzag. You have another impulse. So what are we expecting? We're expecting another correction to this level and to come down. All right. So that corrective structure is in the making, is what is developing right here. Okay, so the corrective structure has given us the first impulse. This is the first leg. Okay, this is the second leg. This is the corrective structure. Then we want this to come to this area to complete this wave. Can you see? So here we are seeing what we are seeing here right now, guys, is with A, this with B, and this with C. You get now? Get the gist? This is what we are looking at. We have with A, with B, with C. So it's going to be called a complete corrective structure, guys, for us to look for a sell opportunity to the downside. Okay, because at this level, since this is a zigzag, guys, we would like this to form to come to 78% fib retracement. And where 78% fib retracement, guys, this area between 68 to 78, guys, between this level, we want gold to come here. Okay, that's number one. And then I've told you, when you have it this way, another thing you can do is this. Another thing you can do is simple. You have to just, let's remove this fib. Okay. Another thing you can do is that since you are projecting this corrective structure to be a zigzag corrective structure, what you do essentially is to take fib extension, look for fib extension 2, drop it here, take it to the end of A, drop it to the end of B, trace 100 to 123% fib extension, and 100 to 123 fib extension is here. All right, this level. So if the equal leg between A and C is giving you up to 1,900. So what I did is, when I was giving this trade, what I did was simple. I look at equal leg of A and C. All right, this A and C, because the rule governing zigzag says that A and C is usually of equal length. So I want to respect that rule at the expense of retracement of this impulse. Okay, because if we have to work on retracement of this impulse and we are targeting between 60 to 61% 61.8 to 78% retracement. That is very true, because if you look left, that is a big supply area. Look at it. Look at the biggest candle along this impulse on the structural area. Look at this candle before that one. See where it ended. Look at this candle after the big candle. Look at where it ended. So essentially, this is the supply area, guys. Anywhere here, we are looking to sell, go to the downside. But when I look at the gap between 1827 that we enter and 1900, the pip value is too much. That is why I did not take my eye off this counter trend. That's why I decided we should go in for the buy of gold. Then when you look at it in 1 hour, no, let's go to daily. Let's go to daily. So when you look at it here, what gave me impression that the corrective structure is over? I am seeing an engulfing candlestick pattern here. Although anytime you see engulfing candlestick pattern and the candle that engulfed the order, the bigger candle that engulfed the order, if you are seeing a wick on top, that wick on top of it is an indication that there is possibility of the pair to struggle a little before it makes a move to the downside, because that one alone signifies a kind of selling pressure. All right, a kind of selling pressure. That's what it signifies. So based on that, I have to, in that case, move to 1 hour time frame, identify my impulse and correction. Okay, and in this case, my impulse is coming in the form of 3-wave corrective structure. Okay, it's coming in the form of 3-wave corrective structure. So when you feel the 3-wave corrective structure, you have to target between 50 to 61.8. And where is 50 to 61.8, guys? Look at it here. Boom. So yesterday let's remove the fib. Yesterday this market was here. Okay, it was forming this structure. And then what did I do? I said, oh, part of the rule is that after the move is made, you have to be able to define adequately the nature of corrective structure that is in the making. And so what did I see? So you feel happy when you see impulse and correction is forming, and you are seeing a clear definition of the nature of corrective structure in the making. Look at it. You have 1, 2, and 3. This 1, 2, 3 is not off to 50 to 61.8. And what it means is that it's going to form a double correction. So you have 1, 2, and 3. So this is W down. Then 1, 2, 3 up. That is X. This is the connector. This is more or less like this X in the middle is more or less like the nail that is used to join 2 planks together. This is 1 plank, and this is another plank. And what do we see? Boom, to the downside. That is Y. So as soon as this Y comes down, which has been forecasted since yesterday, we forecasted this move to come down since yesterday. And as soon as it got to the level that we are looking for, we look left. Did we see any demand area? Oh, yes. Yes, a demand area. Let me show you that demand area right away. So we don't just get in anyhow. When it got here, we have to find out whether there was demand area. Do you see this big candle that made a move? Do you see that the move eventually broke structure to the upside? That shows the significance of the move. So what we do to determine the exact level that the market is going to push to the upside is to check whether there is demand level. So this biggest candle here, down here, we look at the candle that formed just before it. Look at where it stopped here. Trace it to the right. Look at the candle that formed after the biggest candle here. Look at where it stopped. Trace it to the right. This is the spot that this market is going to make a move to the upside. This is what is called demand level. What do I call it, guys? Demand level. That is why exactly at this level, guys, 1827, I waited for the move to happen to confirm to me that this big move to the upside is going to happen. And what move did I see? Look at it, engulfing. I saw this engulfing candle. I told you, you don't just read candlestick pattern anyhow. You want to identify candlestick pattern in a critical structural area. So as far as I'm concerned, this is my own structural area because it's between 50% retracement of that impulse to 61.8% of that impulse. So that's my structural area. I saw this engulfing, I say, get in. Some people say they will wait till 133 and then they will sell for a continuation to the downside. And I was laughing. I was laughing because, you know, this market analysis is highly, you know, subjective. So anybody can try his luck, but some of us, by the grace of God, are able to add some other confirmation that increase the level, you know, of objectivity of our analysis. Is that okay now? I have told you time without number that I can make a loss, okay? I can lose a trade. And the only thing that can make me to lose a trade is not because my direction is not right. It's probably because a market is supposed to be a sell, but I quickly want to take a small buy before the sell. So it can catch me and I will lose the trade. These are some of the conditions where some of the conditions that makes me to lose trade as a person. Otherwise, there's no reason why I should lose trade anyhow. So if possible, I'm trying to caution myself right now that I want to trade in the major direction. I don't want to trade a counter trend or whatever again. You can also make the decision. So where are we going right now? I want gold to continue to move to the upside. Let it continue to pull up, correct, pull up, correct, pull up, until it gets to the fifth level that we have identified on the daily, around here. Once it gets around 1900, exactly at this spot, guys, we look for sell opportunity to the downside. And that sell guy is not going to stop. It can be correcting along the way, but it's not going to stop until it hits 1700, guy. 1700. Go and write it down. When we start selling here, it's not going to stop until it hits 1700. That is my forecast. All right. And God's willing, guys, I'm going to give you the setup. I'm going to give you the setup and the trade, you know. So let's move on, guys. Let's move on, guys. Secondly, let's go to GBP card. GBP card. Where's GBP card? Okay, GBP card. Okay, GBP card. All right. You see, weekly. See, you don't sell at this level. It's right at the low. So at this level, even if you see a sell setup, do not sell a trade like this because it's at weekly low, it's at monthly low. So everything you have to look forward to here, guys, is buy setup. All right. If it's correcting, it will buy to correct. If it's reversing, it will buy to reverse. So it's not likely you go wrong if you look for buy opportunity at this stage. All right. So let's just go to 4 hours. Okay. You see, you have identified a big impulse that breaks structure. Always understand when I'm talking, when I say a big impulse that broke structure, I know what I'm saying. When I mention break structure, it's very important. You don't just look at impulse anyhow. Okay, if you identify a move as an impulse, the question is that does the impulse break structure? If that impulse does not break structure, you want to cleverly look at it as part of a corrective structure for more downside. Okay, assuming this move right now stop here, I'm never going to look at this move as an impulse. Why? Because there is still a structure here that has not been taken. Okay, that is why if you take maybe a one-on-one course with me, or maybe you take a mentorship course with me, I'm going to teach you what is called internal structure and external structure. All right, you have there must be an internal structure break, there must be an external structure break before you can look for entry. Those things are very, very paramount. They are very, very important. All right. So now in this scenario, guys, there is a structural break. Look at it. Down, correction, down. When this one was coming, what happened? This is the high. It has been taken. Okay. So based on that, guys, I will have to start to look for a corrective structure. I want to look for my entry. And you know, by now, part of the rule for my entry strategy is that first, there must be an impulse. Number two, there must be a correction up to 50 to 61.8. Number three, I must be able to define the nature, the form, and the size of the corrective structure. Number four, I must be able to spot a demand or supply level at the left-hand side along the impulse. I must be able to define this. Are you okay now? So these are the rules. Are 4 different rules for my what? For my entry strategy. Number one, there is impulse. Look at it. And then number two, this impulse will come to 50 to 61.8 here. All right. And then number three, I must be able to define the nature of the corrective structure. That is why I saw some of my friends, I saw some of my friends and all those things, they have started buying GBP card at this level. Then I laugh. And honestly, it's not possible for me to beckon on them to say, no, don't do that, don't do that, don't do that, because they are master on their own. What are they looking at? What they are looking at is simple. There is a break. There is a break of this flag. This is, you know, this is purely an amateur way of looking at the market. Purely amateur way of looking at the market. You are looking at the market based on emotion. Your emotion is overriding, you know, your trading system. Nathaniel Tunde has a trading system that says every correction of an impulse must come to 50 to 61.8. Every correction of an impulse must come to 50 to what? To 61.8% retracement of that impulse, not 38. If you take a fib of this impulse, guys, to this level, where is this? It's 38% retracement. I saw it when it was coming here. I said, if you can make 50, I will get in because it has fulfilled my requirement. But this is 38 for Christ's sake. After that, when he hit that 38, he made 100 pips. I said, that one concerns you. You have to come to my structural level. If you don't come to my structural level, I'm not going to buy. Can you see? Is it going well or is going sickly? It's sick. The candles are sick to the upside. Why is it sick to the upside? Because there is no adequate discount for us to buy. Adequate discount comes to this demand level. Look at demand level, guys. At the structural area that we want to buy, is there a big candlestick at the left? Yes. Where is it? Look at it here. Can you see? That's it. Can we spot our demand level? Can we spot it? Yes. Where is the candle that formed before it? See it here. This candle. Look at the end here. Where is the candle that formed after it? See it here. This is your demand area, guys. Your demand zone. I have told you, forget what you think you know before about a demand, supply, all those things. Forget about it. This is the right way to trade. That's what I'm showing you. Go to London, go to Brazil, go to Canada, go to anywhere. If they teach you anything that is different from what I'm teaching you, it's a lie. It's null and void because it's not going to work. Irrespective of the strategy you understand and you trade. If that strategy is not telling you, to come and buy GBP card at this level, that strategy is dead on arrival. Yes. Don't tell me you have a flag here and then you want to buy. If I'm an investor and I have opportunity to buy here, I did not buy. I have opportunity to buy here, I did not buy. Is it here I will buy? What happened to those that bought here, guys? But if this market comes to this level and I'm buying here, this is a good discount compared to those that bought here. What's the difference between us? Just a little. And remember, when they were buying all this one, I was also investing the same capital elsewhere to make money. And then when there comes this big retracement, I also buy. Another thing I want you to know, guys, is that you ask yourself a question. What if this continues to go to the upside? What if it continues to go to the upside? Does it mean we have missed the trade? That is what some people will ask. Does it mean we have missed this trade? No, you have not missed this trade. What has just happened is that this move to the upside has become part of this impulse. I've never told you before. I'm telling you today. That is why I keep saying it. If you follow me consistently for 6 months, you are going to get every secret you need to know in trading. So if it starts going up from here, you have not missed this trade. What has just happened is that this impulse that is going is not over yet. That's the meaning. If it does not come to 50 to 61.8, it means this impulse is still ongoing. And then when you want to now look for opportunity to enter, you now take a fee between this place and this spot. So target 50 to 61.8% retracement again. It means you have a three-wave structure up. You have three-wave structure up. Then you are going to expect three-wave structure down to hit this level. This is where you're going to buy to the upside. That is how it is. This is structure, guy, and this is how to plan your trade. It's as simple as that. You know, it's as simple as that. This is how you go about it, guys. It's not more than this. Okay, so that is a GBP card. My signal group, they are having the right price. In fact, they are even having a trade right now on GBP card. I've given them the buy limit where I expect this market to hit, and we take a buy from that level. I've given them the stop loss and everything. I've given it to them, but I'm giving you that setup now. What we want is this market to come down, pick order, and then move to the upside. The next one I want us to take a look at right now, we have looked at gold, we have looked at GBP card. Let's look at GBP CHF. GBP CHF. You know, honestly, I missed this trade at the right level because I went for a program early this morning, and because of that, I missed this trade, and I did not want to set buy limits. I didn't want to set buy limit. You see, I told you anytime you have a big impulse like this, that need to be corrected. All right, before you continue, there is usually some corrective structure that will form before that move, before that correction is over. Okay, there's usually some move that will happen. So if you are able to read that move very well, you can catch that retracement. You see, after a move up, you have 1, you have 2, you have 3. So what do we expect next? You expect the next move up to the upside to break this top. Simple. To break this top. Boom. And by the time it breaks this top, guys, when you take a fib of this impulsive leg to the downside, remember your impulse is not ending here. It's not ending here. It's ending here. Remember the concept of orthodox bottom? Correct. So where is 50 to 61.8, guys? Look at it here. We have 50 to 61.8 right here. Boom. So if you are conversant with some of these levels, you might not even use fib again. You know the level is coming. You can use your eye, you know, to target 50 to 61.8. But at this level, please use your fib. We want it to come here. Let's delete this one. Okay. So what we are expecting for this market, let's go to 1 hour time frame, is this. Ordinarily, how I love to trade it is that each time it breaks previous low, I get in. I look for psychological level and get in. When it broke this one, I know that this structure is over. 1, 1, 2, 3 in the middle, and then 1. Boom. Can you see? So this becomes wave A. This is wave B. Wave B is usually in 3 waves. So I'm supposed to have, you know, given I'm supposed to have dropped this trade. I was supposed to have dropped this trade on my signal channel 1800. That was supposed to be my entry. All right, stop loss 100 pips. It won't get here. I'm not sure. It's not supposed to get here, guys. Then from here, we now target this zone as TP. All right, my TP is 1.200000. All right, and then let's see how it goes. Do you understand now? So that's it about GBP CHF. This is just this simple strategy to trade a corrective structure after a big impulse. You can go to my channel. You'll see a video there that describes the strategy to trade a reversal or a correction after a big impulse. You see it there. Where's the big impulse? Look at the big impulse. Where's the correction? Look at the correction. So this correction must form before you have this move to the downside. And one thing that is very important, very significant about this strategy is that you are going to see a divergence that shows that the move to the upside is imminent. You are going to see a divergence. Look at it. For those that don't know what is called divergence, just spot this low, low, low. Okay? Spot this low, low, low. So lower, low, lower, low, lower, low. Look at it. This low is lower than this one. This low is lower than this one. This low is lower than this one. All right. Go to your indicator, guys. What do you see, guys? Higher, high, higher, high, higher, high. All right. Let's check it. You see this level corresponding to this level on the RSI. See this level is higher than the previous one, whereas it's lower here. See this level? Lower than previous one, but higher here on the indicator. This level lower than them all, the lowest, but here is the highest on the indicator. So as this level is making a lower low, lower low, lower low, this level is making a higher low, higher low, higher low. And then if you check the stochastic, it has reset itself to the low. All right, that is just a way of telling us that the strength to the upside is here. The imminent move to the upside is certain, and then we have a stochastic that resets itself to the low, meaning that we are good to go for the buy. So if you decide to come down a little, no problem, look for your buy to the upside. This corrective structure is a necessity for any move to the downside to occur. Is that okay now? This corrective structure, A, 1, 2, 3. This is corrective structure, B. Then you have C to complete. And this C essentially must break this top. All right. Why must it break this top, guys? It must break this top because the beginning of C here broke the level of this A. So if you break the level of this A, for us to have, for a requirement of an expanding flat, C must break the end of A. So that's why my TP is 1.2000 conservatively. That's why my TP is here, because by the time this trade gets to this level, it must have broken this top. And I'm choosing 1.2000 because it is the next psychological area after the breaking of the top of this level. Can you see? This is the next psychological level, price level, 1.2000. It might still pass that level, but that is a conservative TP level. So you can see every decision that I'm taking is based on rule, So if by any chance I lose a trade, I don't care, because I know I have followed the rules that I'm supposed to follow for that trade. So if it works against me, I take it in good faith and look for another trade. I don't care. If I take 2 trades and I lose, maybe I lose the 2, I don't care, no problem. If I take 4, I lose the 4, I don't care, because I know a time will come that I will take 5, 7, 10, I won't lose anyone. So that is trading for you guys, and that is how you should be looking at your setup. The next pair I want us to look at clearly is NZD JPY. NZD JPY. I want us to look at NZD JPY, guys. NZD JPY. Have this trade here is going to slow down, but this is a swing trade. I want to hold this trade as long as is practically possible. Okay, I want to hold it as long as it's practically possible. So why am I holding this trade, guys? Because there is need for a corrective structure at this point in time. There's need for corrective structure. And then you have this move to the downside here. Okay, this move, this three-wave structure to the downside is part of the corrective structure. So what I'm expecting is that there is possibility, because there's possibility of, if this is wave A of the three waves in the middle, then you might just have 1, 2, 3 and a push up as wave B. Then you must have 1, 2 and 3 as wave C. So this, not wave C, this will now be a 3-3-3 structure, which is 3 waves here W, 3 waves up X, and 3 waves down Y. From here, we now have a push to the upside in accordance or in alignment with the existing fundamental that we are having right now. Because the fundamental we are having right now shows that there is need for NZD to strengthen against the JPY. All right, there's need for it to strengthen against the JPY. But right now, it will stay here for a long time in the middle before that will happen. Because of course, you know, too, every economy in the world now, right now, is struggling. Okay, United States is struggling. You know, England is, United Kingdom is struggling. You know, Japan is struggling. China is struggling, trying to curtail COVID-19 and so on and so forth. Every economy is struggling. The biggest economy in Europe, Germany, is struggling, guys. All right, Germany is struggling. So there is pressure on every currency right now. So we may have to, you know, battle with, you know, a lot of sideways movement for quite some time to come. So this is just one possibility you might see in this pair. So, but why by the time I show you the other possibility, I will now show you why I have to take this set. That irrespective of what happened, you know, even if I'm not going to have the TP, the trade here to this level, at least minimally, it must break this low here, about 82. And from 82 to 85 is about 300 pips. So that is one scenario. The second scenario is if we have this as a 3-wave structure to the downside, okay, and we have this, if this qualifies as a 3-wave structure, then you must have 1, 2, 3, 4, and 5. So this will now become what? ABC structure. 3 waves here, A, 3 waves here, B, 5 waves here, 1, 2, 3, 4, and 5. And that 5 wave is C. Because remember that a regular flat is a 3-3-5 structure. That is 3 waves in wave A, 3 waves in wave B, 5 waves in wave C. Wave C is an impulse in a flat corrective structure. Okay, it's an impulse. That's why this becomes ABC. But supposing it is 3-3-3, 3 waves here, 3 waves in B, 3 waves in C, it is no longer ABC structure. It has become WXY structure. Is that okay now? So that's how you look at this market. That's how you look at it, guys. Okay, so at any rate, and whatever happens, I am expecting these guys to come down. So you can see by the time we enter, I think we enter at 85.22. That's giving us in my signal group. That was where we entered. Okay, I also dropped this trade in my with my intermediate students. I think they are on it now. It's a swing trade. Let's keep it. Then let's go to 1 hour and see what's happening, guys. Let's go to 1 hour. Though you have seen an impulse here, I told you when you see an engulfing in daily, if you see an engulfing in daily, it is compulsory for you to identify impulse on 1 hour. It is compulsory, guys. So you go to 1 hour, you see development of an impulse already. But why I had to enter this trade right at 22 is that it may just continue to go without even giving us a correction. But at any rate, our stop loss is above this level. So even if you give corrective structure of up to 50%, you might just have drawdown. But because we don't have many trades, we don't care. It might correct to this level, come back to this level, give us, can give us a drawdown of 40 to 50 pips. I don't care. Then from here, it drop down to the downside. Okay, that is what I'm looking at. Minimally, I expect it to come down to break this low. Then once it break this low, about 83 or 82, we take our profit and watch what will happen, whether it's going to take alternative 1 or alternative 2. If it's going to take alternative 2, the structure will inform us, and then we'll look for corrective structure and take a move to the downside. But if it's this corrective structure is going to take at 61.8 of this impulse, guys, 61.8, which is this level, is going to give us a reaction. All right, there will be a reaction, maybe engulfing candlestick that's so buying pressure. So it will tell us that this has become a corrective structure for more upside. But if it comes here and it's giving us corrective structure here, oh, you know that this is 1, this is 1, this is 2, and this is 3. That's the meaning. It means this corrective structure is going to break down to break this low to complete the structure for upside. That's all. That's all. So that's how we are looking at NZD, JPY, and we are strongly in the trade, guys. We are strongly in the trade, and hopefully we want it to deliver a good result for us. Want it to deliver a good result for us. Then the next trade I want us to look at. Do I have any other trade I'm looking at right now? Let's go to Telegram. Let me check. The next trade I want us to look at. Do I post anything? Oh, this Signal channel. All right, so you can send your request for chat, guys. That I love these guys. This guy is practicing very well. I love him. Let me see if you are, yeah, you're on Telegram. That's good. I love this guy. ALL. You're practicing well. You know, you are practicing well. I love you. I love you. Another guy that's impressing me very well, that very soon he himself will become a guru in this market, is what is his name? Yes, Prolific _ Anselm is trying very well. He's trying to lay his hand on some setup. I love you guys. I love the way you are pushing. If out of every 100 I'm able to get 5 or 10 that are doing fantastically well, I know that I've provided succor to 10 families. Okay, that will be my joy, guys. You see, gold, when I gave you gold setup at this level, what did I tell you? I said gold is coming down to this level, and exactly at the level I indicated, guys, gold made it move to the upside. Okay, that is how this pairs will be analyzed. You see, these are trade setup in the night for the sell of GBP USD, Euro USD, but honestly, there was no way I could have given this trade to anybody at night, because I want everybody to enjoy the night. All right, so what else again? Do I send anything? Okay, let's look for request. Let's look for request, guy. Euro odd. All right, Euro odd. Okay, let's check Euro odd. Okay, let's check Euro AUD. Let's admit some people. Okay, Euro AUD. Boom. Okay, I told you Euro AUD, guys, is going to hit 1.5500. That's my target for Euro AUD. It should hit 1.5500, guys. 1.5500. So it's going there gradually, and it's going to hit it. So how do we know? How do we know it's going to hit that level? How do we know? You take a fib, this level. This is your orthodox bottom, not here. You have no business coming here, guys. You have no business coming down here. This is where you should stop with your fib. Okay, if you stop it here, where is 50 to 61.8, guys? This is the level here. Can you see? All right. This is the level here. Okay. And then I told you that when you are doing your analysis, you must be able to recognize an impulse. Where's an impulse, guys? Look at it. Before this market, this impulse completed, guys, there was no single buy candle there. All are were red candles to the downside. So this is a fine impulse to the downside, guys. So for us to identify this impulse is very simple. And then the only missing link here, guys, is that when you are taking your fib, you tend to come and put it here because this is the low. It's wrong. I want to believe until I told some people that, until I told the concept of orthodox bottom, many people did not know. They will be putting their fib here. No, that's why you are getting wrong result in your analysis. Your orthodox bottom here is here, guys. That's why we are spotting corrective structure to end here. And then the second requirement is that you must be able to define the nature, the form, and the size of the corrective structure. So how are we able to define it? Look at it, guys. Look at it. You have the first move here. That's wave A. You have another move, 3 waves here that break the bottom of the beginning of A. That is wave B. This is a strategy I taught you on how to trade a correction after a big impulse. So once you identify the first reaction, that is A, and the second reaction, which is B, now appear in form of 3-wave structure that breaks the beginning of A. That is your entry. This is our entry, guys. Look at it. This is our entry of this trade. Look for psychological level. Can you show me the psychological level? Here, I will tell you now. Look at it. 1.4400. That's the level, guys. 1.4400. That is the entry. And then if you don't want to make an entry at that level, you can wait to see a move that breaks the previous structure. Where is the previous structure? Of course, we have marked where we are going. Let's now delete this one. Let's delete this one. Where is the previous structure? Look at the one that was coming down. Look at the previous structure here. So you want a move here that breaks this structure. So when you have this structure broken, what you have to do is to take a fib of this leg, this 3-wave structure up. Where is 50 to 61.8, guys? Look at it here. When you trace it to the left, do you see the demand area? Yes. Look at it here, guys. Then, do you see engulfing? Yes. Look at it here, guys. So if you take this trade from here and put stop loss here, you will never lose it. Can you see, guys? So I have been shouting right from when we were here that this market is going to 55. Even somebody asked me in the group, he said, how? I said, you will see it. This market is going to 55. It's going to hit 55. It's going to hit 55. Instead of it not to hit 55, it will even pass and break 55 level, guys. I told you, I made it very clear for everybody who care to listen, guys. I made it clear. Where is it now? Right from here, right from 47, we are now at 52, 52.50, 550 pips to the upside. 550 pips to the upside. Then where did I say we are going and why did I choose that area? Number one, the fifth level ends here. Number two, if I take look at this. Let me clean off this a little. Look at this projection. This is 1, this is 2, and this is 3. This is a 3-wave structure to the upside. Then this 3-wave structure to the downside, 1, 2, and 3. This is the connector. So what are we looking at? This wave equivalent to this 1, 2, 3. We want it here. We want it to appear here. So we want 1, we want 2, we want 3. And by the time you get to 3, guys, it's already 55. So how do we project that exact level that is going to reach? Between this wave, guys, between this wave to the upside and this wave to the upside, we want it to be equal leg, because this has become a WXY in form of zigzag corrective structure. W, 3 waves up, X, 3 waves down, and Y, 3 waves up. But if this Y, instead of coming in 3-wave structure, it just comes in 1-wave structure and no identifiable B structure there, then it becomes a B, and C as a zigzag. Do you understand now? So what we have to do now is to use trend-based fib extension, drop it here, drop it at the end of W, take it to the end of X, read 50 to 61.8. Sorry, read 100 to 123%. So we put here. Boom. So I'm telling you that instead of it not to get to 55, it will get to 57, 57, 57. That is target 2. If you have to take this trade after corrective structure, this is where it's coming. It's coming here. So once I talk, listen and check it and follow it. If you go back to the video I sent on trade setup for the week, where I said there will be correction, there is correction. Where I said there will be impulse, there is impulse. Everything I say based on guideline that it will happen, it will happen. Because I'm not designing those rules by myself. There are rules that have been designed, that have been formulated, that we are using. Is that okay? Are we getting it now? So somebody will ask me now, is it supposed to take a buy opportunity right now at this level on this pair? No, you can't take anything now. Don't say because I said it's going to end at 55. You still have 300 pips to the upside, and then you take it. What if you take it right now and it begin to retrace? And this one now form a 3 waves here, a 3 waves here, and a 3 waves here. So this is still valid structure. This will now make a 3 wave move to the upside. That means you have 3 waves here, 3 waves in the middle, 3 waves here. That is W, X, and Y. All we want is that this reaction here must be broken to the upside. Must be broken to the upside for there to be a comfortable and valid move to the downside. This is how we analyze structure. This is what we call structure. Structure is not higher, high, higher, lower, low, lower, low, higher, high, higher, high, higher, high that they teach you. This is what is called structural analysis of the market. Okay, you can't analyze market like this and go wrong. Most of the time, you will be right. Do you understand now? Most of the time, you will be right. Okay, so let's look at the GBP AUD. I told you that we're expecting a 1,000 pip move to the upside. Let's see what it's doing right now. GBP AUD. All right, a 1,000 move to the upside. Oh my goodness, it's going. We enter at 1.74, guy. We are now at 1.7750. That is 300 pips. 350 pips move to the upside. Oh yes, I told you this pair is making one minimum of 1,000 pips. It's going to end at 84. If anybody asks you guys, tell them I said so, that this market is going to end at 1.84. Instead of it not to get to 1.8400, it's going to go beyond 1.8, That is structure. Not me, it's structure. Okay? So, you see it here? I told you that after a terrible move to the downside, there will always be a reaction zone. Look at the reaction. Look at the reaction. Anytime you see a reaction like this, there will be one more move down. All right. And then you now begin corrective structure to the upside. So if you look at it very well in the corrective structure, when I analyze it, I look at it as in a smaller time frame. This is 3 waves up, and then this is 3 waves down. Okay. But one thing that made me to miss this trade is that this 3 wave down, I was expecting it to break this low. That is my system. Okay. If you break this low, then I would have been glad to go in at this level. But it did not break this low. It creates equal low. So I was confused that I'm not going to take this trade because it's not going to, it has not picked liquidity that will enable it to what? To push to the upside. That liquidity is not there. All right. So when it was making this move, I knew it is going to come down because I want this equal low, guys. This is what is called equal low. I want this equal low to be taken to grab liquidity and then make a move to the upside. So I was now looking at this structure 1, 2, and 3. All right. So I was looking at this one to happen 1, 2, and 3. This one now break, this leg will now break this low. This is where I will now comfortably enter and exit at around 1.7000 and exit my trade at 1.84, 1,400 pips to the upside. This is what I was expecting. All right. But instead of this corrective structure, guys, so, and I was looking at this to be as an impulse 1, 2, 3 irregular flat. I was looking at this to go down, break this low, guys. This was my expectation. It didn't happen. Instead, this kept going. And don't be surprised, this could still break down to break this low. So if you are holding in, I had even told my student to close their trade at this level. Yes, on Monday, close your trade at this level, because I'm seeing this as a 3-wave corrective structure to come to the downside, because it fulfills structural guideline: 3 waves up, 3 waves down, 3 waves up to break this top, and then we come down from there. Do you understand? So if you had closed your trade, don't feel bad that you have lost another 150 pips to the upside. You have not lost anything, because we still have this possibility, guys. Okay, A, 1, 2, 3, B, until this level is taken, before you can forget whatever that you are anticipating on the downside. You have to forget it totally, because it's not going to happen. All we want now is that there must be a structural break. If you have this, that will be 1, 2, 3. If you break this level, the next corrective structure here will take us to the upside. That means that you are having a 1, 2, 3, 4, and 5 wave structure to the upside. The last structure meant to catch liquidity above this level, catch liquidity here, and then break down. All right. So already you know this, our structural area is around this level. So all you'll be looking for is the presentation to us of an engulfing pattern. If we see engulfing pattern at this level, that's where we're going to take this pair from here to the downside. All right. By the special grace of God, my signal channel, I'm getting more interested in that channel, because I'm using it to test a lot of my trading system. Okay. We can take a sell here and forget it until you hit this low. That will be like 1,000, 2,000 pips. Only that trade, one can double his account. Okay, that's how I want to be looking at the trade. Okay, so let me check. Do we have any request? Please look at Jama 40. Do you have Jama 40 or Jama 30? I don't think it's DUE 40. I think it's DUE 30. Do we have Jama 40? UK 100, daily and 4 hours. I'm looking to buy this market short term, then sell them later on. They are formulating an ABC pattern. I'm about to trade the C leg up. Okay, let's check. Jama 30. I think if it's not Jama 30, whatever is happening in Jama 30 will happen to the one you are talking about. All right. I think it's been long. I analyzed this pair and I said, I want this to break down. Can you see it has broken down? Boom. All right. So let's see what will happen. Let's go to monthly. I'm sorry. There is somebody that is making some side noise beside my location. Just accept me that way. He's doing his own things. There's no way I can you know, stop him, but just manage. Okay. On a monthly, guys, this pair is still going down. All right. It's sell pressure on a monthly. The sell pressure is there. And then let's check whether there is divergence here. Okay. Do we have divergence? Yes. Can you see? You see high? You see a lower high. So you see here, high, a higher high. So there's a higher high here, there's a lower high here on the indicator. So this is what is called divergence. That's why this fall to the downside is happening. So on the monthly time frame, it is a sell. On the weekly, can we spot what is happening there on the weekly? Okay, that's how you do your analysis, guys. Not just to start buying and selling at any level. On the weekly, you see, you don't have to be deceived about what is happening, guys. If you look at this pair right now, what you see here is an impulse. See an impulse. This is already a three-wave structure, guys, with a short, a truncated C. All right, it's already a three-wave structure with a truncated C. This is wave A, wave B, and then this is wave C. Do you see? A, B, C with a truncated C, and you're having a move to the downside. My friend, I can promise you, if you buy this trade, you will lose. So don't even try it, okay? Because weekly, monthly, they are to the downside. So just forget it. All right, let's go to daily. Daily. Okay. Right now, guys, okay, let's see what is happening in the daily. You have this continuation, you have this impulse, okay? So what is going to happen is that my advice to you is that this is indices, guys. Just leave it, let it come over here, if possible. Because if you want to buy, you are going to struggle with this retracement buy. This corrective structure will make you to struggle because it will go up, it will push down, it will go up, it will push down, it will go up, it will push down. But the way it will be going up will be, it will be pushing higher to the upside than lower to the downside. It will struggle, but one push to the downside will start struggling up again. All this one will be making you to, you know, develop negative psychology, negative emotion, you know, towards your trading. So what you just do is that leave it. Any day you find itself to this level, look for engulfing candlestick here. Once that engulfing is formed, step down to 1 hour, look for impulse, look for correction to 61.8 or 50, and then look for sell to the downside. It's as simple as that, guys. Don't do like me that you know, that was looking for sell opportunity in Euro GBP today, and I had already set sell limit, but I want to give a buy again. I wanted to catch just 50 pips. 50 pips. It's not necessary. Just leave it. Let the market get to that spot and look for sell. And nevertheless, I pray not to lose that trade. Okay. That's why I kept the stop loss very tight, just 40 pips, so that when I lose it, it won't pay me. All right. So that's it about German 30. Allow this big impulse to move. You see the reaction I was telling you, there will always be first reaction after a massive impulse, then the market will move down, then the correction will take place. Where is it going to break? This level. Correction will break it. By the time you break it, guys, this has come to what? 50 to 61.8. Is this the end of impulse? No, this is the end of impulse. This is the orthodox bottom, guys. Where are you expecting retracement to come to? This level. That is trading, guys. From here, we look for sell opportunity to the downside. Okay? So it's as simple as that. UK 100. UK 100, guys. UK 100. All right. See, any pair you get to, you will see my mark there. Have you ever seen me trading this for a very long time? But I come there to practice, to look at what is happening. I want to decode what is happening and see how I can practice. That's all. That's all. Okay. In this UK 100, I would love to see it break this low. Let it break this low. Let all this low be taken before you look for what? Buy opportunity to the upside. For now, all this area, let them break down before you look for buy to the upside. For now, still look for your sell. Still going to sell to the downside. But then, for every sell to be valid, there must be a corrective structure. So as far as I'm concerned, I don't have business with with this stuff until this reaction level is taken to the upside. This is the only level where I can sell. This is the only level where I can sell, guys. And if you go and take a fib of this leg, remember this is your impulse. This is not, your impulse does not end here. Your impulse ends here because of the concept of what? Orthodox bottom. Is that okay now? Orthodox bottom. So if we have to do it that way, then if you take a fib from this level to this level, can you see exactly where I circled? Where I circled here. Where I circled here is your what? Is your 50 to 61.8. This is where I'm looking forward to seeing this market retrace. Then what correction type am I expecting before I take a buy? Even if I want to do a counter trend, if I want to buy, how does the correction present itself? How do I read this structure? Look at the way I want to read it. Okay, I've seen a first reaction. I see a drop impulse. I have 3-wave structure there. So this 3-wave structure, let it break down here, break this low. Then from here, guys, I want to see a reaction that will take me to the upside. Okay, if I see an impulse here, correction here, if you take your trade as 50 to 61.8 at this level, guys, then it will give you this stop loss just here, TP above this reaction level. This is the reaction level above it. Correct. Do you understand now? So in any pair you take, in any trade, in fact, if United States of America appear on the chart in form of a chart, this is how you analyze it. If your country appear on the chart, this is how you're going to analyze it, guys. And it's going to make a perfect sense. This is the strategy to trade a correction after a big impulse. It has taken me not less than 3 to 4 years to take note of this system, to take note of this pattern. And it has been working perfectly, in as much as you can adequately, interpret the nature of the corrective structure that is forming there. Okay, let's check what's happening with our trade on gold. It's making a boom to the upside. It's making a strong push to the upside. Just let it run. Let it continue to make a push. At least we have guarantee that it will hit this level. That's 1857. This is 170 pips to the upside. Then we target this level. As soon as we take this level to the upside, then you expect a correction. Then you now have a push, final push to break this top. Okay, 1900 is our target, guys. 1900. Okay, so is there any other request before we go, guys? We have spent a lot of time. Any question? Do we have anybody with any question? Do you have any question, guys? You can unmute yourself and talk to me if you have any question. Guys, do you have any question?
No, sir.
No question. If you have any question, unmute yourself and talk to me.
Mr. I don't know if I came late. I just wanted to know, have you reviewed pound yen? And what's your view on pound yen?
CAD yen?
No, pound.
Pound
GBP,
yen.
JPY.
Okay. GBP,
yes.
JPY. Okay.
Yes.
That'll be the last thing we'll do, guys. GBP,
Thank you.
JPY. All right, GBP, JPY. You can mute yourself now. All right, thank you. So GBP, JPY, guys. Weekly, you can see, guys, that if you look at weekly structure of GBP, JPY, you see that any moment from now, you are expecting it to sell. All right. But if you are expecting a pair to sell, you don't just go and place a sell, because the sell may not be ready. Okay, it may not be ready because truly you have had this impulse, so you want this correction. But there's something I usually tell people, guys. If you look at this correction, you must be able to define what is happening. You have this wave. When this one was coming down, did it break this low? No. So if it does not break this low, then this corrective structure is zigzag. It's zigzag. And as long as the C leg has not passed a 1.618 fib extension, look at it. Look at it. You see, can you see this level? As long as this GBP/JPY has not passed this level, it is still valid as a zigzag. So if you are selling here without confirmation, you are just disturbing yourself, guys. You are disturbing yourself because this is a zigzag corrective structure in the making. And zigzag corrective structure is valid in as much as the wave C of that zigzag has not crossed 1.618 fib extension. This is what you use Fibonacci tools for. It is not using it to say this market retrace at 0.618, 0.5. What determines the level that a retracement will happen is the structure. I see some people make a lot of mistake. Watch. Thank God I remember this. When you have an impulse like this, they will fib it like this. They will apply their fib. They will put it here, here, and they now mark this level. You see what I'm telling you now. They say this is 50 to 61.8, that this market now will come here like this, will come here like this, and then fall. It has not happened. No, the corrective structure has not happened. You know what they will do? They will now come and place a sell limit here. This is the biggest lie you can think of. What I'm telling you right now here, because it is my duty to tell you what is right and to condemn what is wrong. What determines where this corrective structure is going to end is the nature of the correction, not your fib. It's not your fib that is determining it. It is the nature of correction. So if you have an impulse and you have a zigzag, it's going to pass 50 to 61.8. Why is it making a move to pass 50 to 61.8? Because the wave A of that impulse is almost getting to 50%. But because it is an impulsive move, we know that impulsive move is not equal to corrective move. So by that reason, we are expecting this B to now be a corrective structure to now push up. By the time it push up, the law or the guideline that governs the formation of a zigzag says that wave A is usually equal to wave C. So if that is the case, by the time wave C is formed, it has gotten to 78% fib retracement. So what happened to those that put sell limit at 61.8 golden ratio? They will be losing. So what determines the extent of retracement is the nature of corrective structure, the nature and size of the corrective structure. Why did I say size again? Don't be confused. I'm saying size because if you have a double correction, 1, 2, and 3, it has not gotten to where it's supposed to get to. You now have another 1, 2, and 3. This is W. This is X. You now have 1, 2, and 3. This is Y. So what is determining the level it will get to now is the size. Even though no particular one is getting deeper and deeper, but because they are coming into pieces and they are coming together, by the time the last one is formed, it has gotten to 78% fib retracement. Okay? It has gotten to 78% fib retracement. That's what we are talking about. Is there any other question now? Is there any other question? Any question? So let me just finish the analysis. This is just a little digression because, of course, you know the essence of Wednesday Live is to educate you on the necessary thing you ought to know. The necessary thing you ought to know. I have to educate you on them. All right. So GBP/JPY, where is it? Okay. So right now, the move to the upside is still bullish. what can make us to buy at this level is, number one, if there is corrective structure here, then this level, you have a push to the upside. To get to the invalidation level at 1.618 fib extension that I showed you. So if this market does not come down to this low where you buy here, no buy opportunity. Then at the level where it is now, impulse, correction, impulse, it is at resistance, no sell opportunity. So GBP, JPY, no trade setup for now. Go and rest. No trade setup for GBP, JPY. You want to buy, let this corrective structure happen. Confirmation here, you buy here. You want to sell, what do you see? To sell, to confirm that it's coming to this level, you have to see engulfing here. Daily engulfing candlestick pattern. After that, step down to 1 hour, see your impulse, see your correction to 50 to 61.8. If it is zigzag, I always put that. Look for 78. Boom, to the downside. Where's your target? This level. So for now, no sell opportunity for GBP, JPY, because I don't have a sell pressure on higher time frame for me to go down to lower time frame. You can see that in the case of NZD, JPY, I had a sell pressure on daily. Let's go to NZD, JPY. NZD, JPY. I had a sell pressure on daily. Can you see? I had my sell pressure. That's why I got in. Although it has not finished forming, but I know that because there's a reaction in this resistance and the market is coming down, I know the possibility of it to continue to go is there. That's why we enter at around, I think 85.22, about 23 or 25 pips in profit now. Do you understand? That was why I entered. So by the time you go to 1 hour, although I acknowledge that we are still going to experience some retracement, this market will still come and do some retracement like this. Correction will flush to the downside. But I just want to hold it for like 3 or 4 days to see what will happen with it. Is that okay now? All right. So in the absence of no further questions, I want to thank you all for attending this training. And I see you again same time next week. If you want to join my Signal channel, just contact Feiti. The description, contact will be indicated in the description of this video. All right. And if you have not subscribed to this channel, please do subscribe to it. Allow YouTube to share the video to other people so that they can be properly educated about the working of the chart. All right. Also like, comment, and and share the video to others. Thank you very much for coming, and God bless you. Bye.